Hello and welcome back to London. We're going to hear from Karim Abadir from Imperial College once again, this time with his economist hat on. He predicted the financial crisis back in 2007 in a couple of public speeches, so he's definitely worth listening to. I know you've been critical of the European Central Bank and that you think it acted too slowly. Now that Mario Draghi's in place, how would you assess his tenureship so far?
He's reacted very quickly to events, unlike Mr. Trichet, who was much more cautious and conservative. And Mr. Trichet was very late in lowering interest rates. In fact, he was raising them when we were already into the recession and the crisis. So I think the ECB now is doing the right thing in terms of monetary policy, in terms of interest rate policy. In terms of other things we can discuss, but in terms of interest rate policy, I think they're doing the right thing.
Is there anything else that he can do as the leader of the central bank?
Yes, the quantitative easing type of approach and which debt to buy and so on. This is a very thorny issue and there is disagreement on that. But I think the consensus is he's doing a very good job with interest rate policy. But
how would that work if he was to introduce QE? Because it's such a complex union.
It is, yes, and then you get into all sorts of questions as to which countries and which bonds to buy and so on. So it is a thorny issue and anyone would face questions on that.
Obviously you're an academic and that's a nice academic idea, but in the real world, do you think that's going to happen?
No, and unfortunately now whatever funds are available are being diverted to rescue packages rather than QE type approach. Which is always a reaction. A bank should take the lead and not be reactive, should try and take the lead in preventing crisis from happening. Now that the crisis has happened, it's a damage limitation exercise.
One of the key issues of this whole crisis has been austerity, the cutting of deficits, the raising of taxes. And I've spoken to many people who have many different views on what governments should be doing. But as I understand it, you don't think there's a need to cut deficits too soon.
In some countries there was a dire need because there was no way they could keep on spending like this, for example Greece. But even there the austerity is really harsh. And Britain, for example, didn't need to do what it's doing. And Britain is pushing itself into a triple dip recession because of that. France has started saying, well, under the new president, we are not going to go ahead with the austerity that the previous president was going to implement. There are some countries that have the room to maneuver and don't need to cut deficits now. When the economy expands, you're going to bring in more taxes and this is going to reduce deficits somewhat, but you don't need to accelerate the recession by slashing spending.
Weren't the markets telling these countries that they did need to cut their deficits? If we take Italy as an example, it had the same budget deficit or debt to GDP of more than 120% for 2 decades or so. Then the markets were telling Italy that it needs to cut its deficit because their bond yields started to rise. So isn't it a case of...
But it was also a political crisis and the other ranking of countries in terms of when the crisis should happen, and I ranked them as gypsy, not pigs. So I thought Italy was the last one in sequence, but I actually were the one before last, and it was accelerated by politics, not by economics.
If you were in charge of the purse strings of the UK, what would you be doing now? Would you be encouraging capital spending?
I would be encouraging, well, capital spending can be encouraged with having low interest rates like we have now. You can also use all sorts of other tax breaks and so on. But then we're talking again about the budget deficit, and trying to slash it will go against all these things. But also I would like to bring back consumer spending and not scare the consumer into thinking that the government is going to be cutting all sorts of benefits.
Another country which is looking to cut its deficits is the US, and they've obviously got their debt ceiling and budget issues. That's another country which is interesting because many would argue that there's no immediate need for them to sort out their budget deficit.
Yes, and had the US done the kind of austerity that Europe is implementing, then they wouldn't have come out of the recession. So yes, they should do it gradually, they should cut the deficit gradually, but for example the fiscal cliff is totally unnecessary. It's not the way to deal with it. And I think the longer term threat in the US is the availability of other countries' consumers to, or investors to finance their deficits. So they have to tackle this one gradually and start on it now.
I know you applauded what the Fed did, but what their process of bond buying, isn't that just storing up inflation for years down the line?
Yes, they have to be careful, and I mentioned that in previous publications. They have to be careful and be on their toes, because inflation is not yet a risk, but it might be in a year or two.
Yeah, and here's a familiar question to you. One year from now, where do you think we're going to be with this whole financial crisis?
I think the US is still on course to do well. Europe, on the other hand, is facing a triple dip, serious setback, and they've been too much in a hurry to implement austerity. They could have waited, or most of the countries could have waited.
Professor Karim Abadir from Imperial College speaking to me there. And if you haven't heard his interview on Egypt, then it's definitely worth checking out here on Dukascopy TV. But for now, goodbye.